In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, it is one of the largest U.S. software IPOs in history. UiPath shares climbing on the company's debut. We're going to talk to the CEO, Daniel Dines. Plus, the buy now, pay later model has made Affirm a household name. It is now scooping up Returnly, the company that lets shoppers get the right item before fully returning the wrong one. We'll talk about the $300 million deal with Affirm CEO and PayPal co-founder, Max Levchin. And she's just 18 years old and she makes plenty of green. We'll talk to Katie Feeney, TikTok creator, who has 5.4 million followers. She reps brands like Amazon's and the Disney Channel, and she's part of our week-long series on the founding and phenomenon of TikTok. All those stories in a moment, but first the markets, where it looked like a buy the dip day. Let's get to Bloomberg's Kriti Gupta and Ed Ludlow. Kriti, we'll start with you.
Well, cyclicals outperformed, Emily. Materials, energy, those were in the green. What didn't do so well was those tech names, some of them still in the green, but big tech was the make or break case. And that's why you can see right behind me the S&P 500, the NASDAQ in the green, the New York FANG Index underperforming. And of course, this is also coming as we see a little bit of a pullback in that NASDAQ volatility. Flip up the board, though, and I want to show you what the semiconductors did. Positive action on the day itself, but on a one-year time frame, you can see they actually track some of those 10-year break-evens. That really comes into the forefront when we're talking about those inflation expectations, those kind of unaccounted for sources of inflation. That chip shortage, very much a part of that narrative. Flip up the boards one more time, and I want to show you some of the other sectors that did fairly well today. The NASDAQ Golden Dragon Index right at the top, 2.5%. Now, of course, those house, the likes of Baidu, Alibaba, JD.com, and of course, some of that is spillovers coming from the Asian session. We'll see if it continues in a few hours. And of course, we also have those electric vehicles as well as those NASDAQ biotechs doing pretty well. Also, that's the macro picture. Emily, for the micro, let's get to Ed Ludlow.
Yeah, that's your single name story right there. Netflix down almost 7.5%. Biggest drop since just before the election in November. Biggest points decliner on the NASDAQ 100. The company added 4 million new subscribers in the first quarter, below its own forecast of 6 million. Is this the end of the stay-at-home stocks? That's the question we pose. Flip up the board, because the picture tells the drama of Tuesday evening when we got results. The stock's been treading water. We knew that the growth slowdown was coming. Netflix signposted it. Then look at that drop that we got on Wednesday, because no one expected the growth slowdown to be that severe. And the interesting thing, if you flip up the boards again, is the effect we felt in the other stay-at-home stocks, not necessarily streaming, but look at Peloton Interactive, down more than 6%, one of the big beneficiaries of the pandemic. Lots of people getting Pelotons when they're exercising at home. Some of the other stocks, Zoom and Roku, were both down earlier in Wednesday's session, but actually they came back later in the day. Final board, if we want to flip it up, then story I'm looking at is Tesla and Luminar. This is interesting. You were talking about EV stocks. Luminar, you might not have heard of them. They're a LiDAR maker, contracts with lots of big car companies, up 15% on Wednesday. News that they've hired Tesla's former general counsel to be their general counsel. Lots of interesting stories about former Tesla alumni going to other startups, a big space to watch. Tesla actually up as well, 3.5%. Earnings next week, that's one to watch, and a big points mover on several index today as well. Emily.
All right, our Ed Ludlow, thanks so much for that roundup. Meantime, UiPath making a splashy debut on the New York Stock Exchange, with shares closing 23% above its IPO price. The automation software maker raising $1.3 billion in this IPO, now valued at more than $35 billion. Started in an apartment in Romania in 2005, UiPath is now in nearly 30 countries. Co-founder and CEO Daniel Dines joins us now. Daniel, thank you so much for joining us. So, a nice pop, not too big, not too small. What's your reaction to today's debut and the pricing as it is?
Thank you for having me. It's been a great day for us. And first of all, I would like to thank you to our team that has done wonderful. We've been through a lot of hardship to get it here, but this is a great moment of celebration and joy.
So talk to us about, in a nutshell, what UiPath actually does and how it works. What software robots, quote unquote, do you actually have, and what tasks are they automating?
Well, so we are an enterprise software company that helps enterprises to automate manual, repetitive business processes. We have a unique approach that emulates human users, more like a self-driving car is able to emulate human drivers. We can really automate most of the manual repetitive task processes that you found today in an enterprise, like paying invoices, processing orders, reconciliations, transactions, and so on. We've done quite a lot of work to help our customers during the pandemic. For instance, we are working with Cleveland Clinic to cut waiting lines through testing their driving testing sites, and we were able to cut the waiting time from 3 minutes to 15 seconds.
What does this mean for jobs, Daniel? I mean, does this mean more workers someday will be out of a job because of software like this?
We believe that this is a technology that actually adds jobs. Even if you look at LinkedIn profiles, the demand for automation engineers has increased like 40% year over year. And of course, jobs will be transformed. And I would like to tell you that on one's plate, there are manual repetitive tasks, but also normally there are tasks that involve engaging other people, creativity, strategic thinking. And when we basically reduce the amount of manual repetitive tasks, we focus people to do the other type of more human-like tasks. Again, I would like to give you an example of Mater Hospital, again from the pandemic. We help nurses to reduce their time filling paperwork that was required to send testing results to their patients from an astonishing 3 hours a day to about 5 minutes a day. These hours were spent by nurses in turn to help the patients.
Fascinating. We'll certainly be watching how the story progresses. CEO Daniel Dines of UiPath. We'll keep our eye on you. Thank you. All right, coming up, Affirm has long helped customers buy the things they want now, but pay for them later. Now it's also helping with returns. My chat with Affirm CEO Max Levchin on the company's acquisition of Returnly for about $300 million. First on Bloomberg, coming up next. This is Bloomberg. As vaccines reach more folks around the world, businesses of all kinds are gearing up for massive pent-up demand. Affirm, the buy now, pay later juggernaut, is making a $300 million bet on Returnly, a company that automates the return process for retailers. This amidst the rapid growth of online shopping, a trend CEO Max Levchin hopes will only continue to skyrocket post-pandemic.
What Returnly does is they just completely eliminate the pain of returns by shortening the experience to, oh, you want to return? Great, click this button. You will get your store credit upfront right now. You can pick the right color, the right size, and then at your convenience, put it in a box and ship the item that you don't want back. They really have just created a delightful experience. They served over 8 million people and $1 billion plus of transactions. And so it's almost the natural complement to what we've done on the payment side to deliver on the return side.
So you've been a public company now for a few months. How does this fit into your bigger vision of what you want Affirm to be as the economy starts to reopen and slowly and hopefully we come out of this pandemic?
Being a public company has some niceties to it. You have a currency you can use to purchase things. And so acquisitions is now part of our toolbox, and this is a fine example of where we think what we can do to further our mission. It also really is great that this is such a delightful consumer experience, and it doesn't hurt that the economy is finally reopening and the pandemic is hopefully receding, if slowly, and there'll be many more purchasing and returns will come with it, and so all these things fit together nicely.
So looking ahead, what trends do you expect to see in consumer spend as the economy starts to reopen, knowing that many customers have been struggling financially, but also maybe it's time to throw that wedding or travel? I know Verbo is one of your new merchants, or go out to restaurants.
96% of people who are supposed to get married in 2020 canceled their wedding plans, but they didn't cancel, they moved them. Only 7% of the couples actually fell apart and didn't get married. It's very sad, but 96% are pent-up demand for weddings. Fashion and travel are going to intersect. Expect more suits in airports, fewer sweatpants. I think that's a pretty important one. I don't know if it's going to be 100% true, but the sort of Thanksgiving rush is going to repeat itself probably almost every weekend over the summer because people are dying to get out. In our surveys, 7 out of 10 people that we surveyed are planning to spend significantly more in travel. Obviously, we always ask them, how do you plan to afford this? And they look to us for that. But everyone, or 7 out of 10 anyway, are increasing their travel budget. Connected fitness actually is one where I think is a trend that isn't going to subside vis-a-vis pandemic. I think one of the things that we learned is that sweating next to another person you've never met, but who's kind of, maybe spraying a little bit too close to you is not a thing you have to do. And so we see demand in connected fitness continuing. About half of the consumers we surveyed in our user base said that they expect to spend more in connected fitness in 21 than they did in 20.
Now, something else that consumers, at least a subset of consumers, are embracing is crypto. Your PayPal co-founders, Elon Musk, has invested $1.5 billion in Bitcoin. He's accepting Bitcoin as a form of payment for Tesla. Meantime, Peter Thiel has said China could use it as a financial weapon. What's your take? And will Affirm start letting users pay in Bitcoin?
I've been frequently portrayed or named as one of the crypto skeptics. And so I think you can consider this something of a thawing on my part, where I'm very actively looking at the opportunities in the space in a big way, because I think, through sort of wandering through the desert for as many years as it has, Bitcoin has finally, and cryptocurrencies writ large, have finally crossed over into the true popular consciousness at this point. That said, the macroeconomic geopolitical implication is probably far more interesting and far more important. I think the real risk to the US dominance internationally, one of the real risks, is a possibility that someone else builds a truly digital currency and that becomes the reserve currency of the world. US dollar should be fully digitized. It should become the digital reserve currency of the world. And so I'm very pro Fed's explorations in the space. I wish they would move very quickly. I think there's a lot of us in Silicon Valley who would love to raise our hands and say, hey, we're interested in helping out. And I'm sure people who have been long pro crypto are more qualified than I am, but for what it's worth, I'm excited to pound the table for that.
My conversation there with Max Levchin, CEO of Affirm. Coming up, the use of Palantir's tech tools has skyrocketed amidst the pandemic, with more and more governments around the world using their software to fight COVID-19. We'll speak with COO Shyam Sankar next. This is Bloomberg. Palantir, the company that provides software and analytics solutions ranging from healthcare to legal intelligence to energy and cyber, has had quite a year. Riding the wave of the pandemic, Palantir, which went public back in September, has seen demand for products grow exponentially, its tools being used to fight COVID-19 around the world. The company also feeling the tailwinds from an influx of investors like Cathie Wood's ARK ETFs, which just revealed it's picked up over 1 million shares. Joining me now for more, Palantir COO Shyam Sankar. Shyam, thank you so much for joining us. So a lot of the companies and governments that buy your software had a real shock to the system when the pandemic hit. And now they're feeling another shock as the world reopens. You're talking to these customers around the world. What trends are you seeing in terms of what they're feeling as the world starts to come out of this?
I think the customers that are really eager to reopen, really reinvesting in this right now, see that the shocks are likely to continue, that an efficient organization that's fragile is not the future. And if you really want to thrive and survive into the future, you have to expect continuous disruption. And so how do you build your organization, whether it's a container ship blocking the Suez Canal or a public health emergency? These things are going to continue to happen.
So let's talk about, are there countries or governments that you find are better at reopening or faring better as this transition back to some sort of new normal happens?
Well, we see this in part in our own business, where the U.S. commercial business is really on fire. And I think that's in part a function of how well, on a relative basis, the U.S. vaccination program has really gone. And I think that the countries that are succeeding on the vaccination front are going to be in a better position here, and that we all have an obligation to help every country get there.
Now, government demand for your software, as I mentioned, surged in the midst of the pandemic, helping with vaccine rollout, helping to predict COVID hotspots. What's your big takeaway from this last year as the COO? And, how do you keep growing the government business, which makes up roughly half your revenue?
So we helped over 100 organizations, government and commercial, in the context of the pandemic, helping them with durability of operations, helping them with disrupted demand, shocked supply, allocating PPE and vaccines, as you mentioned here. And the thing that sticks out to us across all these experiences, across all these organizations, is that they are all structurally stymied by how locked in their data is to legacy systems. That was really the first problem we were helping all these customers with, is getting at their own data to make better sense of it, make better decisions with it, to drive their business and survive or provide a public service. And really, Alex mentioned this on Monday, but we're going to be offering our software for free to all major companies around the world who employ large numbers of folks who are crucial, who make and produce and distribute things that are crucial to restarting the economy, to help get things restarted, help get back to full unemployment, make sure that no one is left behind simply because they're locked into old platforms.
Now, Kathy Wood's ARK Invest just added you to their fund. She's got a huge retail following. Just today, there's been a ton of chatter online among retail investors about Palantir. How do you feel about this new interest?
We're proud of our investor base. We're excited by the folks who are cheering us on and really believe in our long-term vision here. I would reiterate Alex's position in our own. I've been at Palantir for 15 years. I certainly hope that I'll be lucky enough to be here for 15 more. And we're building a really sustainable business for the long term that we think can be one of the most important software companies in the world.
Now, Palantir has pitched itself as the operating system for government, and yet you've got privacy advocates out there who are concerned about this outsized influence and claim that it's allowing companies and governments to weaponize data to perhaps find and deport individuals from certain countries or unfairly target people of color. What's your response to some of this criticism?
Well, in an open society, we welcome this sort of critiques. I think the thing that's actually very misunderstood about Palantir is that we don't hold any data. We don't collect any data. We help our customers bring together their data in our enterprise software platform to make better decisions. But we do that with the principled perspective. A huge swath of the 15 years and $3 billion of R&D that we put into our products is actually about enhancing privacy while enabling effectiveness of businesses or government organizations. So whether that's Datenschutz in the German context or privacy and civil liberties in the Anglosphere, helping companies actually be more effective and more compliant is crucial. If you look at the work that we've done with NHS England with the vaccine rollout, we've incorporated an entirely new privacy framework called purpose-based access control that I think is going to be the gold standard for how you protect the information of citizens, how you govern the use of the data, how you ensure data and AI models are only being used for the purposes that are legally allowed, and you have a full audit trail, full inspectability. I'm really excited about that.
Now, Palantir has offices around the world, but you just moved headquarters from Silicon Valley to Denver. You've personally just moved to Denver yourself. There's always been this sort of lore and mystique around Palantir, this, the defending the Shire and Lord of the Rings references. How has the culture changed since Palantir's become a public company? And is there a new Palantir emerging in Denver?
Well, I've always felt that culture is something you have to wake up every day and fight for, and that the entropy of the universe is really something that slowly eats away at it. So I think Palantirians are a motivated group to preserve and enhance our culture. It's what makes it special to be here. And COVID really reinforced that, just the purpose, being on the front lines, helping institutions, helping save lives is just so rewarding. It's immensely rewarding. And that's true whether we're in Stockholm or Tokyo or Denver or Palo Alto. As you mentioned, we've had 30 offices or so around the world for a long time now. And for this next phase of our growth here, as we grow substantially with industrials, manufacturing companies, and healthcare, Denver is really the right home for us.
Now, your chairman, Peter Thiel, has expressed concern about Bitcoin, that it could be used by China as a financial weapon. And then there's been ensuing speculation that Palantir software could somehow help counter that. What are your thoughts on his remarks, and is there any appetite to use Palantir technology to that end?
Well, I think there's no doubt that crypto in general is a disruptive force, and disruption can be good and bad at the same time. It's a little quantum in that way. And so I think we should be asking these questions. We should be thinking about it. We should be exploring it from all angles, and we certainly are from our perch at Palantir.
Now, I want you to take us into the future. We've got about a minute left. In the last year, so many companies and governments have compressed years of tech adoption into one. What does that mean for the next 5 to 10 years? How differently positioned are they to perform?
Well, I think the pandemic has taught us all, and the subsequent crisis to that the sort of heuristics, the equilibrium that we used to live in is not coming back, and that you should really be planning for a future of constant disruption. And so how resilient is your institution? In the government context, that's the legitimacy of the institution, the ability to serve its people and to keep us united as a society. In the commercial context, it's existential, your ability to survive. Are you going to be around in 10 years? And so I think a lot of the technology acceleration has shown where the emperor has no clothes and what investments people should be making in to have a resilient organization going forward.
All right. Palantir COO, Shyam Sankar, thanks so much for joining us and sharing that perspective. Really appreciate you taking the time.
Thanks.
All right, coming up, the Robinhood trading app has boomed among millennials and Gen Z investors with their mobile-first platform and flashy graphics, which Robinhood, by the way, calls good design. We're going to take a look behind the scenes of the addictive app and why some critics are skeptical. Plus, turning TikTok into $1 million career. We're going to talk to one of the biggest content creators next about how she turned a hobby into high-paying sponsorships with companies like Amazon and the Disney Channel when our week-long series continues next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Robinhood may have made it too easy to trade. The app made popular the zero commission brokerage, eventually forcing major competitors like Schwab and Fidelity to follow, all while introducing millions of millennials and Gen Zers to the market. Critics, however, are after the app, saying it's made trading more like gambling and puts real money at risk. I want to bring back Bloomberg's Ed Ludlow to look at some of the criticism. Ed, what are we hearing?
Yeah, go to Bloomberg.com and read this story. It's bang on the center page, how Robinhood made trading easy. It's a tantalizing tale about the design features that made it so accessible to novice traders. Flip up the boards, though, because one line in the story that caught my eye, accessibility. It gave novice investors access to big names like Tesla and Microsoft, blue stock chips that you really want to get hold of, you want to invest in, but might not have been able to before, but also some of these Reddit stocks that saw huge volatility over recent months. Come with me into my Bloomberg and look at this chart. It shows the dollar value of all of the shares that were traded in some key names, GameStop, AMC, those Reddit forum stocks that were really pumped up by retail investors, sometimes in the tens of billions of dollars on a daily or weekly basis. It's absolutely incredible. Come back to me in the studio, though, and look at this chart. These two lines down here are Microsoft and Tesla. The lesson here is the perils of investing and volatility as well. You'll have to take my word for it that that is Tesla and Microsoft, because the year-to-date gains are so minuscule. But this is GameStop and this is AMC Entertainment. It is literally off the charts, the gains we've seen year to date. And it taught novice investors a lesson in volatility that they weren't trained in, they weren't experienced in. Some people made a lot of money, but a lot of people lost. And that has attracted the attention of regulators and lawmakers on Capitol Hill. Emily.
All right, Ed, thanks for that roundup. Check out that story at Bloomberg.com. All right, meantime, now that regulatory tension around TikTok has cooled, there is one certainty. Content creators on the platform are turning short-form videos into a seriously lucrative business. According to Forbes, TikTok's 5 highest-paid stars have all earned more than $1 million in just the 12 months ending in June of last year. That's through personally branded merchandise and sponsored content for brands like Spotify, Amazon, Dunkin' Donuts. Take highest-paid TikToker Addison Rae. For example, after just 1 semester at Louisiana State, Addison left college to move to LA and join a group of TikTokers to form the Hype House. Her online personality was amplified and sponsorships came rolling in. A few months later, she became the global spokesperson for American Eagle, started a Spotify podcast, and came out with a makeup line called Item Beauty. It all means being a content creator on TikTok can very much become more than a hobby. Over the last few years, there's been much debate around millennials in the workplace, but after seeing Gen Zers launch careers on social platforms, will they even need a workplace? Good question. Let's bring in the next guest in our week-long TikTok series. Katie Feeney is a content creator on the platform who's worked with brands like Amazon and the Disney Channel Con Air and Ipsy. Katie, thank you so much for joining us. So, look, you're just 18 years old. You made $1 million on Snap in just a couple of months. You've got 5.4 million followers on TikTok. When and how did you realize that you could make this much money and potentially turn this into a career?
Yeah, I think that it's hard for anyone to imagine that social media can become such a career. Like it's absolutely insane. And I think over this past year, especially, I started getting lots of brand deals. Brands would either email me, direct message me. And since then, I've been able to work with these huge companies and make money from it. And with Snapchat, I mean, over $1 million in 6 weeks. That is unheard of. I don't think I could have ever imagined that in a million years. So it's crazy.
Wow. Crazy indeed. How does creating for TikTok compare to Snap and to Instagram and to YouTube? I mean, all of these companies are competing for your time. Do you have a favorite?
I definitely started off with TikTok and creating short form videos through TikTok. And that's how I kind of grew my platform. But I mean, the main strategy I've been working with my management team at the Network Effect is diversification and spreading throughout all of the platforms. So I definitely think that TikTok is my largest following, but I love them all. And especially with Snapchat, with their new short form feature, I think all of the apps are starting to become more and more like TikTok and like the short form video platforms, which I love. So I don't know if I have a favorite.
That's very diplomatic. Let's talk about TikTok in particular, because obviously the platform has helped make a lot of normal, everyday people famous. Do you work with them at all, with the company at all? What is your relationship with TikTok?
So yeah, I mean, I've definitely emailed back and forth with TikTok. I think with the other platforms, I've been able to go into meetings with them and learn about the features. I haven't had quite that opportunity with TikTok, but I've been on TikTok since it was Musical.ly, so I know the platform very well. And the main way I do get brand deals is the brand they'll direct message me, they'll reach out to me or my management team. So that's how I definitely get the brand deals. But yeah, I mean, every once in a while.
So yeah, let's talk about the sponsorships, how those come in, companies like Amazon, the Disney Channel. How does it all work? What are your highest paid sponsorships? What more can you tell us?
So I think that it really depends on the deliverables, how many videos I'm making for the brand. Is it over an extended period of time? So now I've been working with, for example, Amazon is definitely one of the higher paying companies because I'm working with them through like a really long period of time. And I hopefully will continue working with them throughout college as well. So I think the longer the long-term relationships with the companies, those are going to be the highest paying ones, like Ipsy, like Casetify, Amazon. I've done some with the Disney Channel. And also what's great about forming these long-term relationships is once I have a close relationship with a brand or an agency, they'll continue to reach out to me if they have another company that wants to work with me or another product. So that's definitely been the way I've made the most money.
And do you have an agent? Do you have someone who's advising you on your side?
So I have a management team with the network effect. I don't have an agent, but they kind of do it all. So they've been super helpful with helping me manage emails and all the brand deals and just scheduling, because I am in high school still and I'm going to be going to college. So it's not a one-person job anymore. I definitely do need some help with just managing it all.
So you are planning to go to college. That was my next question. I wonder, do you feel at all like you don't have to, and what is your long-term plan?
Yeah, so education's really important to me, and I think my plan has always been to go to college, and some people might think I'm crazy for going to college, but I think that, this is all happening so fast, and I have an LLC now. There's still a lot I need to learn when it comes to business. So I got into the business school at Penn State, and I'm going to continue to study business and marketing. And also I'm really interested in film and communications as well.
Congratulations, Katie. That's good to hear. Last question. What's your advice to other young people out there, folks who are watching this and want to know how can they do this, or can they do this?
It really is possible for anyone. And it's always crazy when people call me famous or people react to me in crazy ways, because to me, I'm a normal person. I'm just Katie. And so, it really can happen to anyone. And I think just sticking with it, putting in the work, putting in the effort, there are huge rewards. So hop on social media, any of these platforms, there is money to be made, and it's a career.
Wow. Katie, thanks so much for joining us. What a world. Feeling very old right now, but also fascinated. Katie Feeney, TikTok creator, thank you for joining us. And do not miss Bloomberg Tech's podcast called Foundering, which centers on the TikTok story, the TikTok phenomenon. That is out on Thursday. You're going to hear a lot more from Katie there. And tomorrow we're going to be joined by another one of the highest paid content creators, and that is Josh Richards. How his rise to fame has pushed him to think about investing off the platform. And we'll also be joined by one of the partners at Animal Capital, also focused on TikTok. You won't want to miss it. Coming up, American libraries doubling down on their role in expanding digital access for those who need it most. That means getting outside their buildings, how libraries have fared in the pandemic, and how they're reinventing themselves. Next, this is Bloomberg. During the COVID-19 pandemic, American public libraries have found ways to continue providing their services to their communities, particularly one that was sorely needed, and that is internet access. From offering Wi-Fi in their parking lots to turning vans into mobile hotspots, libraries have taken on a new role to serve their most marginalized patrons. For more, I want to bring in Bloomberg's Linda Poon, who wrote this story for us, our latest guest in our City Lab series. Linda, this is so interesting about how libraries have reinvented themselves. You would assume that, it's been very difficult for libraries with no one necessarily being able to go inside. How have they fared in the pandemic?
Yeah, so libraries have certainly had to step up their sort of services, right? And libraries have always been a source of internet for underserved communities, but with doors being shut, they sort of, they had to adapt. Like you said, they partner with schools to hand out hotspots to students who didn't have internet at home. The libraries that had the funding have rolled out these mobile hotspots into parks and underserved neighborhoods. And then they moved a lot of their service online. So as a librarian has sort of moved online or moved to telephone, so because librarians are also information officers, right? They still play that really important role in their community.
So how do you imagine what libraries have experienced and the innovations they've experimented with, how will that change libraries in a new normal? Are we seeing like the start of the next chapter of U.S. libraries?
Yeah, so one thing that a lot of librarians or experts have told me is that libraries have always offered this sort of service as this internet access, right? So they're in the post-pandemic new normal, we're going to have to see libraries start, putting more efforts or being more deliberate in reaching out to communities outside the building. So one report that I recently reported on says that, communities of color still have trouble accessing online services. So libraries will have to, really work to improve their outreach programs. So at the same time, libraries are also facing budget and staffing limitations. So it's going to be interesting to see whether libraries are going to prioritize certain services or whether they're going to have to, sort of reinvent, what they do.
What kind of support do libraries need? How can patrons like us help?
Right. So in the pandemic, it really became clear how important libraries are. But the one thing that experts have told me is that, libraries cannot be the one to bridge digital divide. They don't have enough resources. They don't have the funding. They don't have the staff. It's a big ask, right? So they're going to need federal support. They're going to need, policies that will boost broadband access in all communities. They're going to need more funding. There's one program that, funds connectivities in schools and libraries. They're going to need the federal government to sort of adapt that so that funding goes to providing internet access to homes.
All right, Linda Poon in our City Lab series. Fascinating stuff. Thanks so much for sharing that with us. Okay, coming up, Spotify is calling Apple's App Store rules an abusive power grab. How lawmakers are examining competition complaints against Apple and Google. Next, this is Bloomberg.
The App Store isn't just a store. It's like a studio stocked with canvases, brushes, and paint, the tools that artists need to create their works. And it's a gallery where they can display and sell their creations. And that is how the App Store empowers everyone to build apps.
That was Kyle Andier, Apple Chief Compliance Officer, who testified Wednesday at a Senate hearing over the potentially anti-competitive conduct by Apple in the App Store. Bloomberg Tech's Mark Gurman has the latest in how the hearing has played out. What can you tell us, Mark?
Yeah, I thought the hearing resulted in some very compelling testimony from Match Group, Spotify, as well as Tile. I did not particularly find Kyle Andier, Apple's Chief Compliance Officer's responses to some of the questions very compelling, and I don't believe he gave some very direct answers. I feel like there was a lot to be desired, and I think that this goes to show you perhaps why Apple did not want to participate in this hearing initially. I thought they were basically put into a corner in some respects. That's not to say some of their points were not great, but I think there were some key issues related to Tile and the competition between the new AirTags and Tile's item tracker that went unanswered. There was a little bit of a debate in the middle of the hearing about why Apple does not take a cut of revenue from Uber while it takes a cut of revenue from Tinder, given those apps both facilitate in-person experiences, one being a date and one being a car ride. So I think this is really going to continue to play out, and we basically were shown today that this is going to be potentially a very long-term issue for Apple, and there's definitely more work to do both on the sides of Apple and the lawmakers to come to some sort of series of changes here moving forward.
Right. Certainly, we can imagine there will be continuing scrutiny on this particular issue. I want to talk to you about the Apple event that we didn't get to yesterday, Spring Loaded. Take quick clip here of Tim Cook talking about the new Macs built on Apple's designed M1 chip and how big a deal that is. Take a listen.
With a giant leap in performance per watt, every Mac with M1 is transformed into a completely different class of product. This isn't just an upgrade, it's a breakthrough.
Mark, would you agree that the Apple's new computers are not, it's not just an upgrade, it's a breakthrough, what we're seeing?
Yeah, so the iMac yesterday, very interesting, very thin, very intricate design, uses the same M1 chip they brought to the Mac Mini, entry MacBook Pro, as well as the entry MacBook Air last year. As more of a pro user, I think there's a lot left to be desired. This is a very much a baseline machine, an entry-level computer, so I'm looking forward to the higher end. But sticking to the chips for just a moment, Emily, I thought it was very interesting that now the iPad Pro runs the same exact M1 processor as the Macs. The difference between the two devices at this point is the software ecosystem. The Mac has a much more impressive, much more vibrant, much more capable operating system compared to the iPad. I think it's due time for Apple to give the very, very advanced iPad hardware the software it deserves and to completely unlock that device. I think the iPad Pro they announced yesterday, technically from a hardware perspective, is extraordinarily impressive. What I really would like them to do is add the Mac software to it to make it even much more capable and finally give me the ability and other people the ability to replace their Mac laptops.
All right, Mark, always appreciate your analysis. Definitely some new and exciting products from Apple just announced. Mark Gurman, our Bloomberg Tech reporter, thank you. And finally, imagine the ability to cure genetic disease for generations to come, or to inoculate the human race against the next COVID-19 before it becomes a pandemic. Dr. Jennifer Doudna helped pioneer one of the biggest scientific breakthroughs of our generation. It is called CRISPR, and it's a technology that can edit the DNA or the RNA within a single cell. I sat down with Doudna in our latest edition of Bloomberg Studio 1.0, where she talked about the technology and its potential.
CRISPR is, in fact, a system in bacteria that detects and cuts virus genetic material, whether it's DNA or RNA. And it was by studying how that actually works, and we did this in collaboration with Emmanuel Charpentier's lab, to study the function of a protein known as CRISPR-Cas9. That line of research led to an understanding of the function of this molecule that allowed us to harness it as a tool for genetic manipulation, namely for altering DNA sequences in any cell in a precise fashion, in a programmable fashion that gives scientists now a very powerful way to understand the function of genes, but importantly also to change the function of genes in a targeted way.
The pace of CRISPR research, the application has been startling. It's been incredible to watch. What are the current use cases that inspire you the most?
Well, I always think about Victoria Gray, who was the first patient with sickle cell disease to be treated with CRISPR here in the US. Her story is so inspiring. I mean, she is somebody who is benefiting right now from the CRISPR technology to be able to live a normal life without being impacted by an otherwise quite devastating genetic disease. And other patients are similarly being impacted by the CRISPR technology. So I think that's one area where we'll see increasing developments, more and more clinical trials that are starting. In fact, at the Innovative Genomics Institute that I started a few years ago here in the Bay Area, we have just received approval from the Food and Drug Administration for our own investigational new drug, or IND, trial for sickle cell disease. So, this is really an extraordinary moment, I think, in terms of thinking about cures for genetic disorders.
Back in the 70s, test tube babies were controversial, and now IVF is widely accepted, available. Do you think it will be the same with CRISPR-edited babies?
Over the coming decades, I think absolutely, that because this is what happens, isn't it? Is that, people get comfortable with an idea if it's useful, if it is proven, and this is, this is still remains to be seen. Like if CRISPR proves to be useful and kind of controllable in human embryos, and that is still in the realm of research. But if that were to happen, then I think it becomes a possibility that in vitro fertilization clinics offer that to their clients. And so then, who should make that decision? Should governments be regulating that? Well, that doesn't really happen for IVF clinics right now. In fact, there's, as you probably know, there's different regulations across different states in the U.S. and of course in different countries is different. And so I think the same thing could possibly happen with CRISPR, where it becomes something that some clinics offer it, and parents will have to decide, do I want to do that or not?
That is just part of my fascinating interview with Dr. Jennifer Doudna. You can catch the full episode tonight, 9:30 p.m. Eastern, on Bloomberg Television, Thursday in Hong Kong and London. It's a good one. And that does it for this edition of Bloomberg Technology. Tomorrow, it is Earth Day. We've got a slew of amazing guests, including former Tesla CTO and the CEO of Redwood Materials, JD Straubel. I'll also be speaking with Jason Kilar, the CEO of Warner Media. You don't want to miss it. That's all for today. I'm Emily Chang. This is Bloomberg.